bottom line. This is about equity investing, and I have come across a very promising, a very interesting life science stock company that has taken my attention. Broadly, again, the structure will be similar. We'll go through the fundamentals and see what I find uh, amazing about the stock. What are the concerns? We'll then do a stock reveal, and broadly we'll see what pinpoints very early in the stage for me that this stock is promising. So let's begin. Uh, Brief introduction of the company. As usual, we'll take a look at the fundamentals. We'll take a look at what I think about the company, and then we'll do a stock reveal at the end of it. Once again, if you've not seen the disclaimer at the start of this video, I would like to reiterate that this is a personal investment interest and personal investment understanding. This may or may not apply to your line of or style of investing, so make sure that you do your own analysis. If this helps in some way, well and good. If not, watch it and still do what you find fit for your risk appetite. If we look at the the company is manufacturing APIs, not the tech APIs, but the active pharmaceutical ingredients. These ingredients are then used into the final products of medicines, doses, tablets, or any other vaccines that are made. Now, broadly, the company has about 38 APIs which go into a variety of medicines across the pharma industry, and they are one of the big suppliers to many companies internally within India and uh, in a lot of Western markets as well. Broadly, if we see the key business areas, then Asia and Europe make up the top areas of business, and Latin America, North America, and others contribute to about 15 to 20% of business. But if we look at uh, just the mix, then manufacturing APIs is what they do as one of their highest business contributing uh, areas. If we look at the positives, and I'm going to talk about most of them at a very high level, but one which stands out is going to be 33% products are backward integrated. I'll explain when we come to that. But a CAGR profit growth of 50% over the past 3 to 5 years. They have been able to maintain healthy OPMs, which is operating profit margins, uh, close to 25 or beyond 25 in some cases. The PE of the stock is very cheap in comparison to the industry PE. So why this is important to me that the current PE is less than the industry PE? It helps me in getting a position into a stock much early before the valuations have gone way too high. And just this in isolation, if you look at all the stocks where current P is less than industry P, and I just start investing in those, there are very high chances that I'll make a loss on most of those, because current P being less than investment P is applicable when you have done all the other homework around the fundamentals, all the other homework on the cash flows, the profits, the cash equivalents, any kinds of borrowings, and if you have done that analysis and you find a company that is healthy, and to add that up, the current P is less than the industry P. Now that makes a good combination, in my opinion. 33% products are backward integrated. Now, like we said at the beginning of this, that 38 APIs is what this company manufactures. Now, these APIs also to be made require certain raw material from other suppliers, right? So that means that this company is dependent on other suppliers for their 38 APIs to be made. But what they have done with time and with expansion is that 33% of their products, I think about, if the number is not wrong, then 12 out of about 38 products, they have been able to make it fully backward integrated. That means now they can make their own supplies and they can also make the final API product from those own supplies. So they do not depend on any outsourcing for supplies of those raw material for making those 12 APIs. And the plans are that they are planning to make all the APIs backward integrated so that the cost comes down and eventually the margins increase in the long term. How well this gets executed is all a future plan. Nor, neither me nor you would ever know what is going to happen in the future about this plan, but we can always track. There are no long-term borrowings, which is a good thing. The cash equivalents are close to 5 times the short-term borrowings, so there is no worries in terms of defaulting on short-term borrowings. The ROC is consistently above 30%, and the capex plans that I've seen in the recent annual reports is definitely to expand facilities. Uh, they do have two broad goals. One is to increase the number of APIs, and the second one is to make sure that all the APIs that they make are fully backward integrated. So those are some of the positives. Let's look at some of the concerns that I see. There is a negative free cash flow in the last 2 years. When I checked at what are they investing into because of which the cash flows are negative, I do not see anything wrong. They have invested in building more fixed assets, which I see as expansions. So definitely this free cash flow is a concern, but I'd like to see how the next year or two in cash in terms of cash flow goes, right? And that would be ideal to watch. Uh, the further backward integration plans, like I said, 12 out of the 38 APIs are backward integrated, but the rest of them remain. There is no clear plan jotted at this point as of 2023 March, but we don't know what comes in the future, so I'll be watchful of that. And the other concern that I see is the inventories are increasing. It could be because maybe there is not enough demand right now in the economy. It could be because the orders have been cancelled because of financial crisis. But right now the inventories have increased year on year for at least the last 2 to 3 years. That is concerning because I would call something as sales only when uh, inventories have been reducing and we also get a healthy inventory production on the sidelines. So these three concerns to watch for within the company. Uh, if we come to the stock reveal, this brilliant life science company is Supriya Life Science. This has gone, I think, in the IPO in Jan 2022, and right now trades well below the IPO valuations. Because obviously during the IPO the valuations were very high compared to what their profits were, and so now I think I have come to a conclusion that this is a fair price to accumulate a good stock like Supriya Life Science. Again, there is no particular price point that I am going to tell that you should buy at this point or any other point. It is up to you as to how you want to use this information. But in my opinion, personally, I am using this information to accumulate good stocks like Supriya Life Sciences and many others. And I find this as a very promising company from a fundamental standpoint at this stage. Some concluding statements. The OPMs are high, so excellent pricing power can be seen in the future. Higher backward integration will be key for the company growth. The cash flows is a key concern and should be watchful about. And the price is right now lower than the IPO prices, which gives a much better valuation as compared to its peers in pharma or API manufacturers. And the debt, most importantly, is very, very low. So that makes it a very promising company for future growth aspects to happen. That's pretty much it. Until I speak to you next time, I wish you good luck and good investing. Bye bye.